Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel and zinc. LME 3-month nickel. The break higher in mid-June out of the February to April bearish shift pitchfork proved to be a false break, with prices dropping back down in late June as far as the September 2022 low at 20.045 before stabilizing. Since then, there has been a recovery higher, back out of the bearish shift pitchfork. This one is no longer highlighted and will be retired after this commentary. The initial capping action was at the combination of the then declining short medium moving average, currently at 21.305, and the May 2014 high at 21.610. This lasted for 2 weeks before Monday last week saw a strong third countering key reversal up and bullish double that started to move up over both the short medium moving average and May 2014 high, over the February 2014 high at 22.155, and test up through the medium moving average, currently at 22.305. So far, prices have not established themselves over the medium moving average. Now, looking at the big picture, I said 6 weeks ago that I would take a fresh look at the action since early May. Back then I eventually highlighted a possibility here of a descending scallop pattern. Initially I thought it had elements of a descending scallop pattern, but as I said back then, and I quote, "Looks like a ski jumping profile and the market can choose to shoot higher or fall back to the congestion around the 21,000 zone." I suspect that may be where we might look right now. It also suggests that the 21,000 zone will see the market break lower, but let's see what it does in trying to get down there first, end of quote. Well, in late June, prices reached that 21,000 zone and even exceeded it on the downside, such that it seemed, apart from the September 2022 low at 20.050, we had little in the way until the middle tine of the bearish shift pitchfork. However, this September 2022 low held, and we saw prices recover, and thus negate the idea of a descending scallop pattern, along with its downside primary target X in the 18,900 zone and a harder to reach secondary target X1 down in the 15,800 zone. I said 4 weeks ago, and I quote, "This is only the start, so these may be finessed further or even retired depending on the circumstances," end of quote. Well, I will retire this pattern idea as it's no longer valid. So what has that left us with? Well, looking closely at the action again since the start of May, and we can now see a rounded bottom pattern altogether, and more importantly, one that has a bump structure formed over roughly between mid-June to early July. We are now climbing up the far side of the rounded bottom. So the levels to look out for are the June high at 23,400, and high closes in June around 23,000. The flatlining long moving average, currently 24,520, and especially the August 2011 high at 25,195. Between where we are now and those levels, we need to be on the lookout to see if the market will form a possible handle. But before then, the first order of business is for the market to overcome the medium moving average, which it has been seemingly trying to do today. LME 3-month zinc. To sum up this market, it has exited one pattern, a bear channel dating from April, which it did in mid-June, but then started another pattern, a shallowly rising bull channel, currently 2370 to 2587, which is highlighted in bright red on my daily chart. And, at the same time, it has maintained its position within a very large May to August, so that's basically last year, actually, I think, 2022, a May to August bearish shift pitchfork, currently just over the middle tine, which is currently at 24.94, and that's highlighted in purple on my daily chart. Prices are also currently testing the declining medium moving average, currently 25.71. 5 weeks ago, I opened up the question as to whether we have in the May today action a possible bearish halfway hesitation, or a possible bearish descending scallop pattern, or finally a possible double bottoming construction. Now, I am not sure on the bearish descending scallop pattern idea, not yet. But I am sure that the other ideas do not hold water, not now. Overall, please remember that we are still within this purple May to August bearish shift, 2022 bearish shift pitchfork. In between the overhead purple upper time, currently at 30.30, and the middle time below, currently at 24.95. Now, I've also for many weeks spoken a lot about the March 2020 to June 2022 ascending, expanding wedge pattern. This is way up off the top of my daily chart. I've given in the past some outlandish potential targets for such a long-dated and wide pattern. The primary, outlandish target for such a pattern was in the 25.45 zone. This was achieved 6 weeks ago. 3 weeks ago, I laid out the potential secondary target, X1. This was for a far harder to reach target, and it would be quite a way lower, down in the 13.45 zone. Previously, I had suggested putting this in the back of your diary to only look at occasionally. However, I am now minded to retire this secondary target, as events and fresh patterns have overtaken this idea. So there will be no more of this other than the satisfaction of achieving the primary target. For the moment, keep an eye on the newly constructed bull channel.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.